Hi, everybody. This is the Sentiment Timing Weekly video recap for Tuesday, June 2nd, 2015. Quick little note in the email you got. We are going to be doing a free webinar on Thursday. You can click on the link that is in the email and register. There's going to be, I think, 4 different trading groups that are in there. It's going to be very educational. You'll be able to hear Woody talk about sentiment charts and how he predicts the market. So if you are interested, it's a free webinar. It's on Thursday. All the details will be there, but you just have to register. So anyway, let's get started. A big part of our Sentiment Timing newsletter and reports is that human beings in the markets are irrational, and there's always going to be an irrational element at work in the markets, and that's what creates market opportunities. So why am I repeating this after last week? Because basically the market has gone nowhere, and what I'm getting is, and this is emails that I got today, you can see, and what the irrational part of this, and I'm not saying that these guys are going to be wrong or they're going to be right, but each one of them is pushing for a move up to 2150, 2130, saying that how many times are the bears going to have to give up? How many times is support going to have to hold before the bears give up? And my point to this is each one of them is they're trying to force a direction, and something that we had said after the May turn date didn't work out on the downside was that we were going to get very choppy, sloppy tape, and that is pretty much exactly what has played out. Now, last week I had said, one of the notes I put in was, is it safe to buy? And I had mentioned that we had a cluster of 90% sentiment readings, and that answer is no. Well, as you can see, each time we've got these big pushes, I'm getting swamped with these types of emails that we're heading back up, and each one is getting sold back off again. Now, can we head up? Absolutely. I'm not saying that that's not going to happen, but during the time frames that that we're looking for our next turn date, we're looking for sloppy tape, and that's exactly what's happening. So yes, everybody wants to be in the big trades that are going to produce massive moves, but the market is the market, and it's going to do what it's going to do, and we're going to get into these sloppy cycles, and that's really what we are. So instead of pushing that we're heading up to 2150 and we're you need to get in, we've really been saying just stay out of the market. It's sloppy, and that's pretty much exactly what's happened. So again, a big part of the newsletter is it's kind of training you as a trader that you don't have to be in this market every time, at all times, because you're going to end up losing money. It's the same thing as going to a casino, and they don't give you free nights or free meals when you lose. They give them to you when you win, because they want you to continue to stay there, because they know the longer you stay there, the better chances they have of getting their money back. Well, the same thing is with the market. If you feel you need to be in the market every single day, you better be a very good day trader. If you're looking for a more relaxed way of working the markets and making money, then this is really what you want. You want to know when you want to be in the market buying, you want to know when you want to be shorting, and you want to know when you just want to be out of the market. And this is pretty much what these high readings are saying, is that yes, we could go up, but it's going to be sloppy, and that's the exact type of tape that we've gotten so far. So yes, again, we want these big moves, but there's time. The market is the market. We can't force it to make these huge moves. It's going to be sloppy, and that's pretty much what we've gotten so far. So the thing is that Woody's been right 85% of the time, and the time when there's really nothing to do, we've let people know that there's just nothing to do. It's boring. It's sloppy. We know when the next turn date is coming. When it comes then, we are going to start getting some more volatility in the market. We could get a spike high that is in the cards as well. But we also have a black hole event that's pending. And, the point is that you don't need a whole lot of these moves here to make a lot of money. And the times when there's not really a very good, say, high odds trade, then you just stay out and you wait for one of the big moves. And that's really the way that you make money in the market. It's not getting in every one of these, because you're going to end up losing. And the more you trade, the more commissions you pay, and the more commissions you pay, you got to make a lot more points to be able to make up for that. So you sit and you wait for a defined turn when you have divergences on the S&P, and you get in and you make the 70 points, the 80 points, the 100 points. And when it's here and something goes wrong, you just sit out and let these guys tell you which way they're going, and be in and out of out of the trades 10 times a day, because that's not really what I want to do. I want the relaxed moves that we're going to get big ones, and the ones that go wrong, I know they're going to be basically just really even trades. So here's the thing: if you want to see Woody talk about how he views the sentiments both on the short term and an intermediate term, how he uses the trend duration analysis, how he uses market energy, we're going to go over all of that in the webinar. Again, just tap on the link that's in the email, register, and it's on Thursday. It gives you all the time information. And until then, really until the next turn date, we're probably just going to see this very, very sloppy, trendless market. And if you're trying to swing trade it, then you're getting your clock cleaned. If you're sitting out waiting for the next turn, then you're going to have all your cash, you're going to have your patience there, and you're going to be making a lot of money. So with that, until next week, have a great night, and I'll talk to you later.